What are stock markets? Hi everyone, welcome to the channel. So in this video, I'm going to tell you all about stock markets. Making money demands effort, right? Before we get into the video, let me tell you one thing. If anyone who tells you that the stock market is an absolute dawdle and money for the old rope, then that person is either a con man or a fool. And that statement is absolutely backed by the stock market depressions, which started in 2007. What are stocks? Well, let me break it down for you guys. Stocks represent ownership of a company, and each share of a stock you buy is worth a certain amount or percentage of the company. If a company has a total of 100 shares, each share would represent 1% ownership of the company. If you own at least 51 shares, then you own the majority of the company. If you own 10 to 30% of a company, you can actually vote on certain things that a company does. If the company is really big, like Microsoft or Apple, where billions of stock shares are owned by many people, if you only own one share of the company, then you only own 1/1000th or less of this company. Now the question is, why does a company sell shares? Most of the time, they sell their shares in order to raise money for expansion. If they sell the stock, then they do not need to take a loan out and pay interest. They just merely sell a part of their company. The funds received by selling stock are used to do such things as hiring new employees, developing new products, and building a new building, and many more. Now, what is the stock exchange? The place where stocks are bought and sold is actually referred to as a stock exchange. There are many stock exchanges around the world, including two of the largest exchanges in the United States, the NASDAQ and the New York Stock Exchange, both located in New York City. Now, let me give you an example of that. Suppose you're the owner of an ice cream shop that is very successful and everyone loves to eat there, and you make a ton of money. Each year, your ice cream shop makes approximately $80,000. So you decide to open 9 additional shops throughout the country. With 10 shops, you would now be making $80,000 profit. But you realize it will cost a lot of money to open the 9 additional shops. So obtaining a loan from a bank would be one option, and the other option would be selling stock in your business. So after thinking about these options, you decide to sell stock and sold 50% of your company to people with shares of stock. This provided you with the funds needed to open the 9 additional shops. This is the best way rather than to go for a loan. This language of investment sometimes seems designed to confuse the novice. Now, if you want to know what and how are the returns. One thing I can say is shareholders benefit twice over when a business is doing well. You'll get dividends as they get dividends as they're part of the company's profits. And the value of the shares goes up so that when you sell, you get capital appreciation as well. That's amazing, isn't it? Now let's see how to be a successful trader or investor. So, always remember a few rules about investing. Number 1, if someone offers you a substantially higher profit than you can get elsewhere, then there is always a risk attached to it. Number 2, the price for higher returns is higher risk. Don't you think so? Number 3, also know that the stock market is, of course, not the only avenue of investment. You still have to know those financial instruments. They are 1. Shares and other things issued by companies. 2. Bonds and gilts. 3. Derivatives. These are the clever ways of packaging the primary investment, but they have their own character benefits and drawbacks. Know where to put your money, and you should also know whether you are an in-and-out energetic trader or a long-term investor. You must understand how the market behaves under normal conditions. Now, what influences our predictions? Reoccurring events such as presidential elections every 4 years, end-of-quarter portfolio rebalancing, options and futures expirations, tax deadlines, and holiday have a predictable influence. Now, what affects the markets? Our day-to-day lives, such as paying bills, going on summer vacation, holiday shopping, and 401k contributions have an indelible effect on the market. And don't blindly subscribe to dogmatic schools of market cycles with rigid counting systems. But always remember, stock market cycles are not exact. They are as much as an art form as a science. Be contrary to the crowd. When everyone is in agreement and dead sure a particular cycle, level, or future outcome is in play, the market will likely wobble off course and do what the least number of market participants expect. With all this information, you must be wondering how to predict the future of markets. The best tool is common sense. So, using common sense, technical indicators, fundamentals, and contrary thinking, you will be able to anticipate the future with success. So trade carefully, invest wisely. Have you ever heard the saying, "A rising tide lifts all boats"? Let us relate to this. When referring to economic and the financial markets, it means that everyone does better in prosperous times, and most stocks perform well in bull markets. Conversely, all boats drop when the tide goes out. So being in a bull or bear market has the single greatest influence on stock prices and the value of your investment portfolio. So it is critical for all investors to know how to identify the two. I agree that stock markets are fascinating because they're so unpredictable. What type of investor would you like to be? There are some people who have a lot of time on their hands, and they want to really learn the ins and outs of the markets. Whereas some other people just want to do it passively. They want to take some of their money from their job salary and maybe put it into the 401k, but they want to make sure that they're doing it correctly. So by this, you might have understood that there are active and passive traders. You may find people buying stocks on a whim, seeing any news, and not actually really knowing anything about the companies. So try to find a buddy or a friend who might also be learning about investing or maybe into investing, and then discuss with them before going any further. This is better than blindly investing, right? Or better to have a mentor to guide you. There are different strategies for investing. Maybe you've heard of some of these, such as technical analysis, fundamental analysis, and passive funds and behavioral. To talk about types of accounts, you have an individual brokerage account or joint accounts, custodian accounts. If you're under the age of 18 in America, then it's difficult to invest in stocks. But don't worry, there's a way through. You just need to get your parents' help and go for a custodial account option. Life is all about doing something to reap benefits in the future. So basically, all of us are in the investment game. However, it means doing different things to different people. But have a plan, because when a person's capacity to earn diminishes, he can fall back on his investments. So have a clear picture of your financials before investing.